Hi guys, welcome to my YouTube channel. Before watching the video, please subscribe my channel. In today's video we will discuss the disaster of FTX. First, what is FTX? FTX Exchange was a leading centralized cryptocurrency exchange specializing in derivatives and leveraged products. Founded in 2018 by MIT graduate and former Jane Street Capital International Exchange-Traded Funds trader Sam Bankman-Fried, FTX offered a range of trading products, including derivatives, options, volatility products, and leveraged tokens. It also provided spot markets in more than 300 cryptocurrency trading pairs such as BTC/USDT, ETH/USDT, XRP/USDT, and its native token FTT/USDT. In early November 2022, the exchange and the companies in its orbit began a steep fall from grace. It filed for bankruptcy after facing a severe liquidity crisis. In the beginning, FTX's wide range of products and easy-to-use desktop and mobile trading apps drew crypto investors of all skill levels, from beginners to seasoned professionals or, in crypto jargon, from newbies to whales. The FTX platform offered a comprehensive range of order types, from basic market orders to more complex trailing stop orders. FTX supported 9 fiat currencies that investors could deposit and withdraw via a wire transfer: the US dollar, euro, British pound, Australian dollar, Canadian dollar, Swiss franc, Brazilian real, Ghanaian cedi and Argentinian peso. FTX was incorporated in Antigua and Barbuda and headquartered in the Bahamas after moving from Hong Kong in September 2021. Its FTX Digital Markets Limited unit was regulated by the Securities Commission of the Bahamas. The exchange did not offer services to U.S. residents. The Turkish lira and Japanese yen also have restricted usage, with the Hong Kong dollar, Singapore dollar, and South African rand having functionality soon. Several days after the publication of the CoinDesk article, on November 7, Binance CEO Changpeng Zhao said on Twitter that his firm intended to sell all its holdings of FTT. Binance had received FTT from FTX in 2021 during a transaction in which FTX bought back Binance's equity stake in FTX. Zhao cited recent revelations that came to light as the motivation for selling FTT. Bloomberg and TechCrunch reported that any sale by Binance would likely have an outsized impact on FTT's price, given the token's low trading volume. The announcement by Zhao of the pending sale and disputes between Zhao and Bankman-Fried on Twitter led to a decline in the price of FTT and other cryptocurrencies, resulting in a 3-day bank run of an estimated $6 billion that sent FTX into crisis. On November 8, Zhao announced Binance had entered into a non-binding agreement to purchase FTX due to what he referred to as a liquidity crisis at FTX. The deal did not include the sale of FTX.US. On November 9, Bloomberg called the acquisition of FTX by Binance unlikely due to the poor state of FTX's finances. Bloomberg also reported that the United States Securities and Exchange Commission and Commodity Futures Trading Commission were investigating the nature of FTX's connections to Bankman-Fried's other holdings and its handling of client funds. Later that day, the Wall Street Journal reported that Binance would not move forward with the deal to acquire FTX. Binance cited FTX's reported mishandling of customer funds and pending investigations of FTX as the reasons for not pursuing the deal. Bankman-Fried said in a Slack message that FTX had learned through the press about Binance's concern and decision. On November 9, FTX's website said that it was not processing withdrawals at that time. Bankman-Fried said that although the firm's assets were worth more than its clients' deposits, it would need funds from outside to meet demand for withdrawals due to a lack of liquidity. Bankman-Fried stated on November 9 that FTX.US, as a separate company, was not currently impacted by the crisis. Worsening crisis, bankruptcy, and unauthorized transactions. On November 10, Axios reported that FTX approached Kraken for a potential rescue deal. Bankman-Fried made several statements on November 10, taking responsibility for FTX's failure and indicating that FTX was still seeking capital to remain solvent. Bankman-Fried also announced that Alameda Research would cease trading and end operations. FTX's in-house legal and compliance teams had, for the most part, resigned by November 10. Anonymous sources cited by the Wall Street Journal on November 10 said that Alameda Research owed FTX some $10 billion, as FTX had lent funds placed on the exchange for trading to Alameda so that Alameda could make investments with the money. On November 12, anonymous sources cited by the Wall Street Journal said Alameda CEO Caroline Ellison disclosed to other Alameda employees that she, Sam Bankman-Fried, Gary Wang, and Nishad Singh knew that client deposits were transferred from FTX to Alameda. An anonymous source cited by the New York Times on November 14 said the same. The funds were used in part to pay back loans Alameda had taken to make investments. Though Bankman-Fried said that FTX.US customers did not have reason to worry on Twitter on November 10, employees began attempting to sell assets belonging to the firm on the same day. These assets include stock clearing company Embed Financial Technologies and the naming rights to FTX Arena. On November 10, the Securities Commission of the Bahamas froze the assets of one of FTX's subsidiaries, FTX Digital Markets Ltd., and related parties, and provisionally appointed an attorney as liquidator. Japan's Financial Services Agency ordered FTX Japan to suspend some operations. The company's Australian subsidiary was placed under administration. On November 10, the team running the FTX Future Fund, a charitable group bankrolled by Bankman-Fried, announced that they had resigned earlier that day. Future Fund had committed $160 million in charitable grants and investments by September 1 of that year. On November 11, FTX US, Alameda Research, and more than 100 affiliates filed for bankruptcy in Delaware. Anonymous sources cited by the New York Times said that the exchange owes as much as $8 billion. The crypto lender BlockFi, which was affiliated with FTX, announced on November 10 that it was suspending operations as a result of FTX's collapse. Bankman-Fried resigned as CEO and was replaced by John J. Ray III, a corporate restructuring specialist who previously oversaw the liquidation of Enron. As of November 12, Bankman-Fried told Reuters that he was still in the Bahamas, though other high-ranking FTX employees had begun leaving for Hong Kong, the location of the company's former headquarters, or other locations. Authorities in the Bahamas, including the Royal Bahamas Police Force, questioned Bankman-Fried on November 12. Despite FTX's bankruptcy, Bankman-Fried continued to attempt to raise money for the firm during the weekend of the 12th and the 13th of November. Late on November 11, some $473 million in funds were removed from FTX through what Ryan Miller, FTX US's general counsel, characterized as unauthorized transactions. Miller further announced that FTX and FTX US intended to move remaining funds denominated in cryptocurrency to offline cold storage. The funds taken from FTX were mostly stablecoins such as Tether, and were quickly exchanged for Ether, a method used by cryptocurrency thieves to thwart attempts to retrieve stolen funds. A person speaking on behalf of FTX in a Telegram chat referred to the unauthorized transactions as a hack and encouraged users to delete FTX mobile apps as they were compromised. Kraken has since announced its assistance in identifying the perpetrator. On November 14, Kraken's chief security officer said on Twitter that the firm knew the identity of a user who paid transaction fees associated with moving the stolen money through their Kraken account. In an interview with Kelsey Piper published November 16 by Vox, Bankman-Fried blamed an ex-employee or malware on a device owned by an ex-employee for the theft. Between $1 billion and $2 billion in customer funds reportedly could not be accounted for as of November 12. The Financial Times reported that FTX's balance sheet shortly before the bankruptcy showed $9 billion in liabilities, comprising $900 million in liquid assets, $5 billion in less liquid assets, and $3.2 billion in illiquid private equity investments. Bankman-Fried began publishing cryptic messages in sequence on Twitter on November 14. As of November 15, the messages read what happened. On November 15, FTX sought to raise $10 billion in liquidity from investors. Effects on investors. Institutional investors that stand to lose money due to their stakes in FTX include Tiger Global Management, the Ontario Teachers Pension Plan, SoftBank Group, BlackRock, Lightspeed Venture Partners, Temasek, and Sequoia Capital. Sequoia Capital wrote down its equity in FTX to $0 on November 9, losing some $214 million. Sequoia released a notice to investors, also published on Twitter, assuring them the firm's stake in FTX represented a small amount of its overall portfolio, and replaced a profile of Bankman-Fried published on the firm's website with a link to the same notice. The Ontario Teachers Pension Plan released a similar statement. Temasek later wrote down its investment on November 16. Several public figures also invested in FTX or received compensation for promoting the company. These include former couple Tom Brady and Gisele Bündchen, as well as Shaquille O'Neal, Stephen Curry, and Kevin O'Leary. Anthony Scaramucci, founder of Skybridge Capital, announced the firm was attempting to buy back a 30% stake in the business owned by FTX. Effects on other cryptocurrency firms and cryptocurrency markets. Cryptocurrency investment firms with assets still held on FTX after its bankruptcy include Galois Capital and Galaxy Digital. Cryptocurrencies experienced swings and declines in value as news of FTX's collapse first emerged in early November. Tether dropped below its peg price of $1.97 and Bitcoin sank to its lowest price in 2 years. Share prices for publicly traded cryptocurrency companies declined. The price of Solana, which was affiliated with Bankman-Fried, declined as well. The crisis at FTX has inspired an increase in withdrawals from other exchanges. A decline in the value of Cronos, the token of exchange Crypto.com, triggered fears of the potential for a collapse similar to that of FTX and spurred withdrawals from the platform. CEO Chris Marsalek provided assurances that the firm was liquid and that it did not use Cronos in a manner similar to the way FTX used FTT. Bloomberg reported that the collapse of FTX exacerbated institutional skepticism of cryptocurrencies as an asset class. We hope you enjoyed our today's video. Don't forget to like and hit the notification bell button. Follow us on Instagram for daily updates. Thanks for watching.